Hey, welcome everybody to the 40 Finance channel. My name's Geoff Beers, doing a quick live stream today. Just got done recording a Visa video that I'll put up shortly after this. And so something to look forward to later. Got a Visa video coming out. Right now though, I thought I'd come in because I see some pretty interesting activity on the stock market board. Most notably, like stocks with great earnings are not really going through the roof, right? And most specifically, talking about Microsoft, talking about Apple, and probably some others in there. I did see Fonz, thank you for testing out the chat. I see LD in there as well. Fonz was asking about Enphase. I did an Enphase video yesterday, so I'm not going to spend a ton of time on it here, but just to answer your question directly, since you're the first one there, Enphase guided in the future a little bit down, more than what people expected. They are having some problems on the supply side with the chip shortage that I think most analysts took too far, maybe, by just saying like, hey, you know, this is scary and, you know, demand is outstripping supply. Enphase has time to get it together, but their stock was running hot. I'm still a shareholder. I'm not selling. Their stock was running very, very hot. So anytime you get in this situation where you are priced to perfection or further, and then there's one little blip in the road, this is what happens. So hang in there on Enphase. If you are a current shareholder, is my opinion. That's what I'm doing. And if you are not, then look for opportunities. Watch the video. I go through all the price targets. I go through all the reasons, but I did just want to say hi to Fonz and answer that question right off the bat. All right, so, and I'm going to get to everybody else's questions as I always do, but first we're going to talk about, you know, the sort of title of this video, which is why do stocks with good earnings go down, much like this one here? I'm going to try to fix this board a little bit. We'll see if it happens. There we go. All right, so we've got Microsoft, and Microsoft had just a great earnings. Let's see if it'd be nice if the first little whatever story here would just summarize it for us. Let me go to Seeking Alpha real quick. It's a lot easier to scan headlines on Seeking Alpha, by the way, in case you're curious. Let's see, Microsoft analyst, upside, blah, blah, blah. Here we go. All right, so EPS beats by 17%. Also beats on revenue. They do non-GAAP. We can focus on GAAP with Microsoft because it's a pretty traditional company. GAAP EPS of 203 beats by 26 cents. So, I mean, that's pretty phenomenal, you know, basically 20%. Revenue of 41 billion plus 20% year over year beats estimates by 860 million. Then it gets into some of the other things. Let's check on cloud. 15 billion versus just shy of 15 billion consensus. So that's all good. Personal computing was up. So what happened, right? Well, in my opinion, and I did not listen to the whole earnings call, but in my opinion, Microsoft, like Enphase and like so many other stocks, are actually up relatively high to their normal averages, right? So this is annual look at forward PE for Microsoft, and we'll start back, you know, how about 2018? Because that's probably about when the cloud started to become a big thing. You're at 24 on the forward, then 26 and 19. Last June, you're at 32, and here you're at 31. Price or PEG ratio up over the past several years. Price to sales, you know, it's up. Everything's up, and that's okay. There's nothing wrong with that. Microsoft deserves to be up. But as I always do in my videos, and you know, we kind of try to feel out like, hey, how much more expensive is Microsoft than normal? And if we project it on the EPS, where do we think it would land? And the biggest part of a price prediction, certainly for a guy like me who does it more fundamentally on earnings per share, but you know what the biggest variable is? It's not even earnings per share. It's valuation, how much multiples people are paying for things, right? So Microsoft is hitting on all cylinders. Enphase, totally different company, set up everything. Enphase was trading at a very high multiple, and Microsoft's trading at a historically high for them multiple. And so I think what you're seeing is the earnings that they did was kind of what was expected, okay? We expected them to beat. We expected at a 34 times or 30 times forward PE. That's the market saying like, hey guys, Microsoft, we expect them to win all year. Look at the Enphase side. They didn't. They beat expectations for the quarter, but then they guided a little bit lower for the year. And then they threw in the chip shortage thing. So they sort of threw a Pandora's box at it. Now they're on unstable ground for the short term till the next quarter. I think they'll recover just fine. But it could be a buying opportunity on both of these stocks if you believe that the rest of the year will be even better. Okay? So this is Q1, January through March, right? This is usually the crappiest quarter for most companies. It's winter, it's cold, it's hard to do business, particularly solar panels. It's good for a business like Apple probably because of e-commerce, but you're not going to make a bunch of sales in a lot of industries in January and February. And then you throw COVID and you throw lockdowns on top of it, then okay, fine. It's just a shit quarter. But these companies are still hitting them, but they're not blowing it out. You'd flip the corner a little bit and you look at Google, and we'll find out Amazon today, which I have high expectations for. Google crushed their earnings per share, crushed their revenue. So now Microsoft inherently is getting compared to Google's earnings, and they didn't crush it by as much. So that's a philosophy there. On Apple's side, you basically have the same thing, okay? And I've been calling, first of all, congratulations to Apple shareholders. I thought, in my personal opinion, this stock was really overvalued last year. It has come down since. Let's take a look at the stats. I don't think that these P numbers are going to be updated. 428. Maybe they are. But when I looked at Apple a couple times over the past year, here's a company that's been in that certainly under 20 forward PE. Here we go. Forward PE, Geoff. Certainly under 20 forward PE for many, many years. Many, many years. Now, last year they were in the 30s and sometimes 40s at the height of the pandemic. If this is accurate based on yesterday's EPS, you're still, arguably 2x the valuation. PEG ratio, you want this to go down, not up. Old PEG ratios in the 2s and the 1s. Now you're at 3. Price to sales. Look at this, 2s, 3s, 4s, 4s. So again, Apple is rocking. They're doing great. They're running their business exactly for everything that you could hope out of them. But when your stock price is inflated compared to what you've done historically, and when you talk about Apple, Microsoft, there's quite a lot of history there, okay? It's really hard to say when you have 10 plus years of data, it's hard to say, well, it's not as expensive as you think it is. Well, actually it is, because it's written right in the statistics. So that's what I think is going on. If you are in Apple or you haven't gotten into Apple yet, I would say that right this second, Apple is probably at almost like a fair valuation, and you still have to assume a hold through a year, okay, to really get that number. But from the business standpoint, getting away from price and statistics for a second, on the business standpoint, Apple is crushing it. All right, they're doing much better than I figured. I figured a strong Q4, holiday season, phone units out the wazoo. It looks like their momentum could continue. And every person that signs up for those stupid phones is almost automatically a services member, right? They're almost automatically going to buy $2 worth of storage and $3 worth of this and that. So kudos to Apple. It's a company I've been having mixed thoughts on as far as could they keep it going in the future. Right now, all cylinders are firing. We'll see if it continues. All right. Now we'll get into the questions. Let's start with Jordan. What do you think of Overstock? I'll put it on the board. Overstock, what I think is very intriguing. I kind of think that they're intriguing from the standpoint of that cryptocurrency play, in particular that platform. I don't know what it's called, but they basically have a trading platform that they launched. P ratio of 60. This is a 1-year move. Obviously, a 1-year chart. Obviously, the pandemic, e-commerce, blah, blah, blah. The question is, can they continue to grow? That's the hard part. And I believe this is one. Yep. So Overstock, and there's another one, furniture one that I can't think of off the top of my head. Man, these profit margins suck. And Amazon was playing this exact same game until they hit AWS. And when they struck gold on AWS, their profit margins as a company improved quite a bit. It takes a shit ton of orders to make $2.55 billion on a 2% profit margin. So that's the only thing that I think concerns me a little bit, is we're not exactly coming into the ideal situation for e-commerce. We just passed the ideal situation. Now, I don't think e-commerce is dead, but I wonder if the best days are behind and we'll see slow incremental drops in business. It does look like, they're still projected to grow this year, revenue-wise, 4.6%, potentially double digits next year. You need to have something more with Overstock than just the online business. I guess that's what I'm getting at. So I think that what they're doing on the crypto side, and they have a trading platform, and I don't remember the name, but if they can build out their income streams to not rely solely on orders, online orders, then yes, I could see the case. I would almost for sure wait for them to have some sort of dip. I know that they're down. What are we down year to date? Actually, if you count January, I'll show you this. If you count January as, the start of the year like it is, they're down from here, but they're up year to date. So I don't know. I'd wait for a little bit of weakness before I got into them. Let's see the big chart. This one's always a pain in the butt to fit into our little viewing area. So interesting, you have 50-day dipped below 200-day. Now you're bouncing back up. I'm not a master chart strategist, but I will say that your RSIs here, I would just say that this isn't the upward momentum that I would buy on, okay? But I'm always looking for deals and opportunities, so my mindset is different. Some people play momentum, and that's exactly what they want to see. They want to see the corner turned into an upward spot. And how many people made $1 million on that strategy during the pandemic? So for me, I'm looking for a company that's a little bit down on their luck, price-wise or other, aka the Apple and Microsoft examples that I used. Enphase would be another. And then, I'll wait for it to rebound. But this one, unfortunately, is not for me. Doesn't mean it won't be good, though. All right, Bilal Khan, the lower it gets, the less risky it gets. Yeah, I assume you're talking about Enphase, which is great. LD loves overstock. If Q1 EPS continues throughout 2021, their PE, yeah, I agree with that. And you mentioned in there some of the things that I thought were the bright spots, what you called them exotic ventures, but I get your point. Like spreading out those revenue streams is huge, because trying to go against Wayfair and Amazon and grow 20% revenue every year is a fool's errand. You might still grow, but that's too much competition for 2% margin. You got this crypto game has to pay off. The other things they're doing have to pay off. So keep that in mind. Yeah, and then random thought, but LD, I was thinking of you when I read that Lending Tree information. So Lending Tree, which LD has brought onto this chat a couple times, this company is starting to really be undervalued. And their loan origination rates, let me see if I can give you the Seeking Alpha bullet points on it. It was really good. Here we go. So EPS, Lending Tree, Q1 EPS may not be comparable. So maybe there's some weird stuff in here. But I saw an interview with the CEO, or excuse me, a quote, and almost all of their volume was up. This article says stock falls 7.9% after EBITDA guidance disappoints. Stock drops as its guidance indicates Q2 will fall short of the consensus estimate. I'm not sure. I did not study it enough to really say. What I will say, though, is there's, I think, a strong potential with this company to return at some point to where they were, which, July of 19, it's a $400 stock. February of 21, it's $344. So if you don't think that they have room to run, they do. And it sounds like, though, LD sounds like it looks like you have to wait another quarter. And possibly it goes down even more, unfortunately, but that can be good, right? Because if you at 219, let's just make something up and say it goes to 200 on a down market day. But you know that the recent upside is as high as 340, which looks like it was a momentum resurgence there. Could be sitting on something nice, but you're going to have to wait for them to turn the news headlines around a little bit. All right, Facebook, amazing earnings, absolutely. Where did they end up? Plus 7% today. Quite a jump from 301 to 329. Well deserved. I think everybody knew that Facebook was undervalued. It was just a matter of time for them to get out of the storm clouds, man. But yeah, if you would have picked that company up during the election, just looking at a chart, election because, there's so much controversy with social media and the election and everything. They had a low of 245 on Jan 15th or so. So well deserved for them. Now you have to be careful at where it goes from here. In the long term, it goes up, but now you're starting to reach fair valuation, right? So if you miss the run up on Facebook, I would just tread lightly and hopefully save a couple bucks somewhere. Talk about buying opportunities a lot. This is Jordan. Do you see any selling? This is a good question. I do not see myself selling anything right yet, but there could come a time before the end of the year. I do try to hold on to stocks for 1 year just to make sure it passes into capital gains tax. And there's nothing right now that I feel like in my portfolio has hit the full valuation that I was hoping it would. So when that happens, I usually just hang. I think the closest candidate for me right now in the selling category, just eyeballing my stuff, sorry, is probably, the first one that would come close is Smile Direct, because I was in at 764. Now it's down today 3%. It's like a roller coaster ride. But they're, a quarter or two away. If they produce good earnings, then you could double up and get into $15, $16 if things go really well. And then I would just consider cashing out because I have too many stocks right now. As far as other sales, I'm not interested in selling DraftKings at all. If it went to some crazy moonshot thing in the fall, I would think about it, though, just to take my money. I love the company and I love the earnings potential over the long term. That's about it. So I really do, my mindset is buy and hold for as long as possible. Now, I did get a little goofy in this year, at the first part of this year, and I feel like I'm kind of disappointed that I have so many names, not because I don't believe in them, just because it spreads the wealth, and it's that endless argument, right? Should you reinvest in the companies that have already gotten you here, which of course for me would be like Visa, PayPal, DraftKings, or should you go looking for the next double up opportunity? Well, I went looking for the next double up opportunity and potentially save on some high growth names when the market was fluttering around. And that's been a mixed bag, but it's so early. Today's April, right? All those trades, PaySafe, Magnite, Palantir, Unity, those are the big ones. Those were all, I think, purchased within the last 3 or 4 months. They're not going anywhere in my portfolio. In fact, all of those names, I think I would average down to some degree. And probably the most at risk of an end phase-like downturn would be Unity Software. Again, I like the company. I think they're going to do good things. That's a 3-year play, easy, and very similar to Enphase. It's going to take a little bit for these guys to establish any sort of revenue dominance. All right, Christopher Motala. I wanted to say Motorola. Google reporting a blowout on the same day probably didn't help Microsoft. Totally fair, and I agree with that. I remember I should buy more Microsoft in the 170s. Yeah, that is probably true. I mean, I think we're getting to this point on Microsoft. It's probably been there for a couple years, right? Now that the cloud is banging for them, and Amazon, Google is probably the same way. It's like if you're, that's a good example of if you got in lower. Let's just pretend you got into Microsoft at $99. And then today it is $250-ish. Should you keep buying? I think that at that point, your personal PE level is so low that you can afford to add some shares, and your cost basis is still going to be trending way behind the actual price of the stock. So that's a little bit of a game I've been thinking about a lot more, particularly with PayPal. And I haven't done the exercise yet. Maybe I'll do a video on it. Is just figuring out the intrinsic PE of your own stocks based on your cost basis. Relatively easy to do, right? Simple division. And seeing like, well, what if your, I'm just going to make something up. What if your PayPal shares on a cost basis perspective is a PE of 5, right? So in that scenario, you can afford to add way above that, and your average is still not going to go up much. So something that I've been thinking about anyway. Omar, are we seeing a recession? Not an economic one. And I say that because, well, and I'm in USA, so if you're not, that's what I'm talking about. There's so much money everywhere right now, it's crazy. Do you reckon there will be a market crash? I have not bought any stocks over the past 25 days, something like that. I don't know. And I will not, I don't know. I always say it and then I blow it. But I'm not planning to unless there's a good down day, like a really quality down day of, let's just say, plus 2 to 3% on NASDAQ, because that's mostly where my stocks are. So I want to see NASDAQ going down at least 3%, and then I'll examine the situation. Danny, you were right about Wayfair. Just to point out my point on profit margins, because Wayfair is right in the same game as Overstock. Look at that. 1.31%. All right, you want to see why I like a company named Enphase. Their profit margins are 10%. And this is in a company where people are selling solar panels for, single-digit percentages. And their gross margin across the whole business is even more. So that's an example. Let's take a look at Amazon on that same metric. Got to go to the statistics. So Amazon at 5%, I guarantee you that's like all AWS. So AWS is probably 30 or 40%, something absurd. And the retail business is probably like point something, right? And they've been running it that way forever. He ran Amazon at a loss forever, if talking about Bezos. So it's more than one way to do it, but you have to have the balancing act. Anyway. Jason HYM, I don't know that. Let me just HYFM, Hydro Farm. It's been around, okay, so this one came live around December 7th. And basically climate control, hydroponics, nutrients. So, farming or agriculture type stuff, I'm guessing that this has gotten big because of the cannabis industry. I will say, I'll put it on the board, but I think the last time I looked at something like this, LD sent over a pick that had similar aspects, but they actually grew stuff as well. And that's the one I would probably lean towards. You're not going to have a lot of history here. Probably have 0 analysts on this. Hey, you got 3. 3 could, some signs of profitability this year. However, $65 divided by 45 cents isn't a lot. No PE. One last thing. Okay, so here's your revenue projection. 25% for this year, 16% for next year. At that valuation, I guess I would just expect more. That would be my 2 cents. Price to sales, not terrible. You know, you want that close to 1 in a perfect book. Very few stocks are close to 1. So I don't know. I don't know enough to say. It seems like $65 share price for 45-cent earnings seems high, but that's, you know, my 2-second look at it. Christopher is back. Any thoughts on Fiverr? I like Fiverr, the service. Let me see what they're doing. You're saying down on their luck this year. Yeah. So peak of 323 down to 216. That puts you right about December. Did they have like a downgrade or something? No, but they're barely eking out an EPS growth. Next year is supposed to be big. Huge. This is the kind of revenue growth you're looking for. You know, if you're going to play a high multiple, you want this plus 50, plus 30. These are big time beats here. This sometimes you can take something away from this EPS trend because it charts all the analysts, and Yahoo kind of does it, lumps everybody together. But 90 days ago, their EPS projection was 76 cents. Something has happened where that's trickled down to 37 cents. And last year, in 90 days, right? So in 3 months, next year's went from $1.50 to $1.21. So just look at it that way, I guess. If you want, I can type it into TipRanks and see what they say. They're expanding their services a lot more as far as being able to allow contractors to charge more. So like digital marketing, which has basically been my career. I don't work off Fiverr, but I noticed that you can get like $100 gigs and stuff now. So last update was 3 days ago. Needham has a buy. And it must be that their earnings are coming out soon. Earnings May 6th. Tough one. Tough one because, you know, there's one side that says, can they fix the problems? This one could shoot up because it's already beaten down. It's definitely this kind of situation that I personally like because it's beaten down. I don't know. You're going to have to read more. Why did it go down, I guess would be the first question. Daniel, TSMC. TSMC today, you know, if you are a new investor, I don't know, I would wait for like a red day. I believe it's still like 118. Obviously, it's a stock that I own. Let's see what you're at today. 118.69. The TSMC long term is great. And don't forget when you buy it, you get, you know, 1.5% on today's price. But chip shortage, I like where TSM sits in light of the chip shortage. I like that they're moving, or they're building a satellite office in Arizona as well as a foundry. So I couldn't be more bullish. But I sit in the neighborhood of $85 to $90, somewhere in there. And they're raising prices too, which is another good thing. I don't think analysts have caught up to it. Analysts think that 22% this year from 45 to 55, then to 60. Analysts think that the chip shortage ends like whatever in 2 months. It's not going to end in 2 months, okay? The whole world is changing. We know about electric vehicles. The demand for chips, the demand for everything on a chip side of the coin is going to go up. And, you know, Apple is one of their biggest customers. Makes you wonder how AMD feels. When Apple, there was a headline, Apple booked like a ridiculous amount of business with TSM after their most recent earnings call, or they announced it. So I love it. You know, if I was going to get greedy on it as a new investor, I'll give you a price since you asked. Nicely, of course. $22, or excuse me, I'll say 25x of $4. 25x of $4, that's 100. So right in the neighborhood of 100 would kind of be fair value. And I think that they keep beating earnings per share. So I don't know. It's not the worst place to get into if you count the dividend anyway. Coinbase at 3, no. Did you guys see? So nothing wrong with Coinbase. It's not for me. That's what I was trying to get across. It's not a stock for me. I did do a video on it. It is under 3 at 295. But I just got good news in my portfolio about this company. I'll tell you in 1 second. I'll show you it. And this is all the more reason I won't be buying Coinbase. And it's not a bad thing. I'm going to make you wait. Boom. Coinbase adds PayPal's payment option for cryptocurrency. So as far as I'm concerned, while it's not apples to apples, with my PayPal stock, I'm getting a slice of Coinbase. So I'm not in a hurry to get to Coinbase. However, it would be one that I consider over the long term, particularly in a broad market sell-off. Check out the video I did. I don't remember what I said, what I thought was a fair price. It was definitely under 300 though. There's just so many ways to play crypto. I don't feel like this is the only one. So that's where my mind goes on it. LD sold her TSMC, or sold TSMC, sorry. Valuation is high. I don't see a lot of catalysts. Yeah, I still like it, but, you know, it is stalled. I will say it is stalled. Also don't really like it during geopolitical. That is for sure an issue. Can't argue those things. Lion comes in. Oh, hold on. Rich Gamer Nautilus Group. Boy. I would say this is exercise equipment. I'd have to read more on it. The assumption would be, if I were to buy it, the bull case would be that gyms reopen and buy a bunch of stuff. Hard to argue some of this here. Low P ratio, earnings hit, earnings hit, earnings hit, earnings hit. Bad 19, real bad. Good 20. I don't know. It is a rarity to see this. Fair value is undervalued in today's world. I don't know. I'd have to read about it, but I'll tell you, like, the initial signs are good. If they hit a $3 EPS this year, then that's certainly great. They are projecting, though, early that next year is going to be a down year. So that's probably what's holding this thing up, right? Is everyone saying, you know, somewhere around here, the projection for the next year or whatever came out and it was going to be lower than this year. So, you know, the future, as soon as the future gets a little murky, then people bail. And because nobody wants to have a stock that has a losing year over year, right? Nobody wants to be sitting on the stock that downtrends. And that looks like it might be happening with Nautilus. So keep your ears open. If they come around with a big announcement for 2022, then all of a sudden your 2022 problems are solved and it could be time to get in. But I'm surprised at how fundamentally sound some of that stuff is. How's the debt going? Yeah, even debt's not bad, 35 million. Trying to find a problem with it. Short percentage of float is 18%, so somebody doesn't like them. But yeah, that was a good stock to bring up. Hadn't looked at that one. Biden's tax increases, more trillion-dollar packages. Yeah. Things are going to get more expensive. I don't see how they don't. These are two international companies. So Lion Pharmaceuticals I don't do. I wish I did. But pharmaceuticals, it's very simple, but it's very hard. And it's all, of course, about drug approvals. And it's depending on what country you're in, if he's talking about international or non-American pharmaceuticals, then it's even more murky for me. But you're looking for press releases, you're looking for drug trial results, and not normally on the low price drug stocks under $5, $10, you're hoping for momentum, really. And I will say that in my experience of what I've watched but not participated in, I would sell, if I got in early on a drug stock and they got to phase 2 trials and it was approved and it shot up because they made it to phase 2, I believe there's 3 phases, I would sell after phase 2 because none of those fuckers make phase 3, none of them. Like, it's just crazy. So that's how I would play pharmaceuticals, but whatever. Danny, I can't help buying if I have spare cash. Okay, not sure which one you're talking about. I missed it. The pick, oh yeah, so there's the alternative play, VFF, that LD was talking about. This would be mildly similar to the other one we looked at that had to do with like nutrients and agriculture kind of stuff, primarily for purposes of the cannabis industry. And I don't have it all memorized, but you could have an opportunity here. I did like some of the setup on VFF after LD sent it along. It is a profitable company. It got hit on something. Top marijuana stocks, and it's actually spread. I'm not going to read this whole thing, but this was what was interesting to me, is it's not just a single thing. They actually have several different revenue streams in the mix, so check it out. I think there's opportunity, and now at $11, you only need to get back, you don't have to get back up very far to make some money off that one. All right, PBX. Power band, So nothing personal, but this is probably penny stock land. I don't know much about this company. So, and I do the occasional video like I've done recently, stocks under $10, but this is a game I can't help you with. Not to mention, I don't know what country code that is, .v, but I wouldn't know anything about it. If you're at home, Subaru, they have nearly $7 billion in cash on a $15 billion market cap. That could be, I don't know if you can trade the Subaru in America. Oh, it's on OTC. So I don't know anything about this, just putting it up because LD was talking about it. 1 year chart. Still paying a dividend, which is good. There's one under $10 that has a strong, well, not strong, but has a solid earnings per share. Not sure. Yeah, it doesn't get any coverage because it is on the pink sheets. But dude, any of these companies that you think might make an electric vehicle in the near future that are already established car brands, I mean, Ford, is Ford still down today? Ford down 10% today. All right. Listen, Ford's not the greatest company of all time, but they came out on one of their best years ever, quarters in recent history, and they announced how, similar to Enphase, that there's chip shortage and it's going to affect them, and it could be $2.5 billion or whatever they said. You'd have to think about this at 1127. Wait for all the math to update on EPSP and all that. You'll also get a new wave of projections from analysts as far as where revenue and EPS will land. But Ford, it could be a beaten down one, and almost for sure that'll end up hitting General Motors just by association. When are their earnings date is May 5th. So yeah, you could see a nice downward movement in GM, and I say nice as a buying opportunity because the assumption right now is going to be, well, if it's happening to Ford, then GM's getting killed too. So there's a game to play there out of nowhere. Any general thoughts on ad tech companies? I like them. I should know more about them. There's so many now. So you asked about Acuity. I don't know that one for sure. I did Magnite as sort of my play in that space. The Pubmatics, the trade desks, if you want to go that route. You're talking about Acuity ads. I'm going to be a little out of my element here. How long has this one been around? All right, so this is stock from 2017. Peaked at 22, down to 11. 6-cent EPS gives you P ratio of 200. See what kind of revenue we're talking about. They don't have any analyst data. We can find that over here though. So they made $100 million in the last 12 months. They are decent chunk of cash compared to debt. Profit margin, 3%. Shares short, not available. Maybe, right? Sorry, I'm not more specific, but I'd have to read more about it. It's a small stock. I mean, that's a $100 million company, so it's small. But the advertising world is changing, and the most important thing that you need to know, which I'm sure you all have heard about, is the Apple privacy update that's going to block basically the old school cookie way that we used to track people. So now there's people that are going into new realms based on devices and stuff so that they can identify you, and Apple's trying to crack down on the whole thing. There is a risk, I don't know Acuity Ads business model, but there's a risk that they could get hit on that if they were still tracking exclusively on a cookie-based scenario. So just keep that in mind. All right, guys, I've got to roll. I'm going to do Lion. Who's your favorite investor of all time? Portnoy, gee whiz. I like that guy. So personality-wise, you put Munger on there. He is my favorite personality. Way too value for me necessarily, and that's coming from a guy who gets ripped every day because I don't buy like super crazy growth stocks. So I'll say Munger is a guy I could watch on TV for 3 hours. Easy. Out of that, those guys, I like Ray Dalio. I don't know if I like any of these guys to say my favorite of all time. I'll take the easy one and say Kathy Wood, and not because So she doesn't have the long-term statistics in her favor, right? She's not in the Hall of Fame, not yet, if you will. But what I really appreciate about her is her conviction stuff is so strong, right? And I'm not a huge Tesla guy. I'm probably more anti-Tesla than pro-Tesla. And yet she sits on the soapbox and does not back down. And we need more women in this industry who can come up and provide different context instead of listening to the same, 40, 50-year-old guys all the time. So I look up to Cathie Wood in terms of who she is and what she's done. If I want to be entertained, I'll take a Charlie Munger book or video all day long because that guy is freaking hilarious. So, all right, guys, thanks a lot for stopping by. Check out the Visa video tonight. I'm going to upload it now. Usually takes an hour or two before it comes up. So appreciate everybody showing up. We'll see you on the next episode.